Hey everyone, and welcome back. We're diving into something today that I bet's on a lot of your minds. Student loans, and you know how they can affect your credit score.
Yeah, it's a topic that can be pretty confusing, a lot of information out there. Hopefully we can make it a little clear.
Exactly. We're basing this deep dive on a podcast episode called Student Loans and Your Credit Score, a love-hate relationship, and it really does feel that way sometimes. We all know that student loans can be a burden, but can they actually be good for your credit score?
Well, that's the thing. They can be.
Yeah.
But like with a lot of things in personal finance, you have to understand the details and manage them well.
Okay, so let's break this down. Before we even get into the credit score part, can you just explain what kind of loan is a student loan?
So student loans are what's called installment loans. You borrow a certain amount up front, and then you pay it back over time with regular payments, similar to a car loan or a mortgage.
Okay, got it. So how is that different from credit card debt? I mean, you pay that back over time, too, right?
Yeah, you do. But credit cards are what we call revolving credit. You have a limit you can borrow up to, and you can borrow and repay as long as you stay under that limit.
Yeah.
But with a student loan, once you borrow that initial amount, you're just working to pay back that one debt.
Okay, that makes sense. So why does that matter for our credit scores?
Well, lenders like to see that you can manage different types of credit responsibly. Having both installment loans and revolving credit on your credit report shows that you're not just relying on one type.
Kind of like having a diversified financial portfolio.
Exactly. All right, so let's dive into how student loans affect your score. There are three main factors to consider.
All right, let's hear it.
The first one, and the most important, is payment history. This is 35% of your credit score. So making those payments on time is critical.
Yeah, I bet that's where the love-hate thing comes in, right?
Yeah.
Make your payments and you build a good record.
Right.
But if you miss them...
Exactly. Even just one late payment can hurt your score, and missing many can really damage it.
Okay, so one factor down. What about the others?
The second is your credit mix. It's about 10% of your score. Like we were saying, lenders like to see that you can manage different types of credit. So having a student loan along with maybe a credit card or a car loan, it shows you can handle different things.
So it almost sounds like having a student loan could be a good thing. If you manage it well, it adds to that mix.
That's right. It helps if you're managing everything well, though, making payments on time and all that.
Okay, good to know. What's the third factor?
It's the length of your credit history. This is 15% of your score. The longer you've been using credit responsibly, the better. And here's where that student loan that you took out forever ago can help you.
You mean those loans we took out when we were younger can actually help us now?
Yep. It adds years to your credit history, which lenders like to see.
It's kind of funny when you think about it, like that old T-shirt you just can't get rid of. Sentimental value, I guess.
Yeah, I like that. Just like that old T-shirt, a long credit history gives lenders a sense of comfort.
All right, so we talked about the good side of things, how student loans can help your score. But we have to talk about the other side, too. What happens when things go wrong?
Right. Unfortunately, there is another side. Student loans can hurt you pretty badly if you don't manage them well. Missing payments is a big deal, and your score can go down.
Yeah, I was afraid of that. We've all heard those stories about people struggling with student loan debt. What are the real consequences if you fall behind on payments?
First of all, your credit score will take a hit, and it might be harder to get loans in the future. You might also have to pay higher interest rates on anything you do borrow.
So it's not just the student loan itself, it affects other things too.
Absolutely. And worst case, if you stop making payments altogether, you can default on the loan. And that's when things can get really serious.
This is where it gets scary. How bad are we talking?
Defaulting can drop your score by 100 points or more, and it can make getting a house or even a cell phone plan way harder.
Wow, okay. So what if those loans go to collections? Is there any coming back from that?
It's tough. Student loan debt is really hard to get rid of, even if you declare bankruptcy. It can stick with you for a long time.
So this is serious stuff. It can affect you for years.
It's so important to understand that and to be smart about managing your loans right from the start. Don't wait until it's too late.
You're right. So we've covered a lot here. I think our listeners are starting to get just how big of a deal these loans can be. So think about your own situation, everyone. Do you have student loans? Are you thinking about taking some out? How does this make you feel about how it could affect your credit?
Take a moment to think about it. What stands out to you most from what we've discussed so far?
We'll be right back to continue our deep dive. In the next part, we'll talk about some practical advice for managing your loans and keeping that score healthy. All right, so we've talked about how student loans can really make a difference in your credit score, for better or worse. But I think people want to know what they can actually do about it. How do you make sure they help and not hurt?
Yeah, you're right. Just knowing about it isn't enough. So let's talk about some ways you can manage those loans and keep your credit score in good shape.
Okay, sounds good. What's the first step?
Well, one of the simplest and best things is to just set up automatic payments. Most loan services have that option, and it can really make things easier.
Makes sense. You won't miss a payment, which we know is really important for your credit score.
Exactly. And a lot of times, lenders will even give you a little discount on your interest rate if you use autopay. So you save money and help your credit.
Oh, wow. Okay, good tip. Anything else?
It's a good idea to really know what repayment plans are out there. Federal loans, they tend to have more flexibility. You might be able to change your monthly payment depending on how much you make, or even pause payments for a little while if you have to.
Oh, yeah. I've heard about those income-driven repayment plans. But to be honest, I don't really know how they work. Could you explain that a bit more?
Sure. So with those plans, your payments are like a percentage of your income, so they stay manageable. And after a certain number of years, any leftover debt might be forgiven.
Wait, so you could actually have some of the debt forgiven. That would be amazing for people struggling with those payments.
It can be, but it's not a perfect solution, those income-driven plans. You have to weigh the pros and cons and really understand what it means in the long run before you just jump in.
Yeah, of course. Don't want to make a choice you regret later.
Right. Talking to a financial advisor or a loan counselor can be a big help, too. They can tell you what your options are and help you make a good choice for your situation.
Good point. What about making extra payments on the loan? Should people be doing that?
If you can, definitely. Making extra payments can save you a lot of money on interest in the long run.
Has to do with compound interest or something?
Right, that's it. The faster you can pay off the main amount you owe, the less interest you'll end up paying. Even small extra payments add up over time, kind of like getting ahead early in a race.
I like that analogy. So we've got automatic payments, looking into different repayment plans, making extra payments if you can. What else?
One more thing, don't forget to check your credit report regularly. Mistakes can happen, and you want to make sure the information about your loans is correct.
That reminds me of when I found a mistake on my credit card bill. I was so glad I caught it.
Yeah, sometimes they mess up, and those mistakes can hurt your score. You have the right to fix any errors, so check your report at least once a year.
Where do you even go to do that?
You can get a free report from the 3 credit bureaus, Equifax, Experian, and TransUnion. You can get one from each of them for free every year at annualcreditreport.com.
Okay, great. So just to recap, we talked about setting up autopay, exploring different repayment plans, maybe making some extra payments, and checking your credit report to make sure everything looks good. Those are all great steps to manage those loans and protect your credit score.
Right. But it's good to remember that everyone's situation is different. There's no magic formula that works for everyone.
Yeah, it's all about knowing the basics, doing your research, and figuring out what works best for you.
Exactly. And if you ever feel stuck or overwhelmed, don't be afraid to ask for help. There are people who can help, like financial advisors or student loan counselors.
Okay, so we talked about a lot of practical tips. Now I want to look at the bigger picture here. Student loan debt is a huge issue for a lot of people with how much college costs these days. Do you think this is going to have an even bigger impact on credit scores down the road?
That's a good question and something I've been thinking about too. I do think that as student loan debt goes up, it will be even more important for people's credit.
So it's really important for people to be on top of their loans, but it also feels like there's a bigger problem here.
I agree. There are questions about how we pay for education and what happens with all this debt. It's a complicated issue.
Makes you wonder if things can even stay like this.
Yeah. Is there a different way to do things? How can people get an education without being stuck with so much debt? These are hard questions, but we need to be talking about them.
I'm glad we are. It's interesting to see how all this is connected, personal finances and these bigger issues. So I want to ask our listeners now, what sticks out to you most from what we've talked about?
What surprised you? What makes the most sense to you? And most importantly, what are you going to do with all this information?
We want to hear your thoughts. You can reach out on social media or leave a comment on the website. We'd love to hear from you.
And remember, you're not alone in all this. There are people and resources out there that can help. Don't hesitate to reach out to your loan service, a financial advisor, or a student loan counselor if you need help figuring things out.
Definitely. Knowing what to do is really important, and it's even better when we can share that with each other.
Before we finish, I want to leave our listeners with one last thought to think about.
Okay, I'm listening.
Imagine if education didn't mean being in debt for years and years. What would that look like? How would that change people's lives?
Wow, that's a powerful thing to think about. It makes you want something better.
It does. And even if that seems like a long time away, remember that change starts with knowing about the problems, like we're doing today.
Well said. Thank you for being here with us for this deep dive into student loans and credit scores. We hope this has helped and given you some things to think about.
Keep learning about this stuff. Read articles, listen to other podcasts, talk to people about student loan debt. The more we all understand, the better we can make things.
Until next time, everyone, keep being curious and take care of your credit scores.
Wow, it's amazing how we started with this question. Do student loans help your credit or hurt it? And now we're talking about the future of education.
It really shows how your own money decisions are tied to these big things happening in the world.
I know, right? And I think that's a big takeaway for everyone listening. It's not enough to just understand how loans and credit scores work. You have to see the bigger picture, too.
Exactly. It's all connected. The more we know about how it all works, the better we can handle our own finances and push for things to change. So as we wrap up, let's hear from you guys one last time. What are your big takeaways from today?
What surprised you? What really stood out? And what are you going to do differently because of what you learned?
Let us know. You can find us on social media or leave a comment on the website. We always want to hear from you guys.
And hey, remember, you're not alone in this. There are people and resources out there to help. Don't be shy about reaching out to your loan servicer, a financial advisor, or a student loan counselor if you need help.
So true. It's like they say knowledge is power. And it's even better when we can share it with each other.
Okay, before we go, I want to leave everyone with something to think about.
Okay, go for it.
What if you could get an education without having to worry about huge loans and debt? What would that be like? How would that change things?
That's a great question. It makes you want something better.
It does. And even though that seems like a far-off dream, we have to start somewhere. And being aware of the problem is the first step, like what we're doing today.
Couldn't have said it better myself. Thank you so much for joining us for this deep dive into student loans and credit scores. We hope you learned something and feel a little more in control.
Keep learning, read articles, listen to podcasts, talk about this stuff with people. The more we all understand, the better we can make things.
That's right. Until next time, everyone, stay curious and keep those credit scores looking good.
If this podcast helped you, don't forget to like, comment, and subscribe. Your support helps us keep making these videos. Thanks for watching.